Hey everyone, and welcome to the Rate of Return podcast, a 30-minute or so podcast whose entire purpose is to equip you with the tools and resources to become the best financial version of yourself. From investing in the stock market or real estate to cleaning up your personal finances, putting you on track to become a millionaire, the Rate of Return podcast exists to give you actionable insights you can work toward today. I have a very special guest. The CEO of Betterment, Sarah Levy. After graduating from Harvard College with her undergrad and subsequently attending Harvard Business School to obtain her MBA, Sarah joined Disney as a senior analyst. And after working 3 years at Disney, Sarah jumped to the other budding media company in the early 2000s, which is Nickelodeon. At first, she helped run strategic operations, but she quickly found herself with the title of Chief Operating Officer, aka running the whole damn company. After 18 years at Nickelodeon, she broadened her scope at Viacom, which is Nickelodeon's parent company, to become the COO of the Viacom Media Networks. In late 2020, Sarah then made her most recent career move, which was to become the Chief Executive Officer, CEO of Betterment. For those of you who are not familiar, Betterment is the largest independent digital investment advisor focused primarily on robo-advising and cash management services. That was a big intro. That was a lot. Sarah, maybe you want to say a couple words or introduce yourself.
Thank you so much for having me, Austin. So yes, why don't I tell you a little bit about Betterment? Betterment is the largest, as you mentioned, the largest independent digital investment advisor. We are a wealth management platform that is easy to use, that is transparent, that benefits a tremendous amount from automation and is personalized. And we have a second line of business that I'm extremely excited about, which is a 401k product that we offer to small and medium-sized businesses, where our goal is really to support employees in their entire financial lives, starting with retirement. And I'll give you just a few more kind of facts and figures about our size and our customer.
Please.
In terms of our size, we manage $34 billion in assets for more than 700,000 customers. And we've seen incredible growth in the last year. We captured more than $5 billion in incremental net deposits last year, which was 130% growth over prior year. So that's a big number. In terms of our 401k business, we're still in sort of earlier innings with that one. We have over 1,000 plans on our platform, but growing at triple digits and just a really, really exciting next vector of growth for us. And then lastly, I would just talk about our customer. Our customer is a millennial professional. They're typically 36, 37 years old, which is comparable to the US median age. And our ideal customer, I would say, is a millennial with a family who can really grow with us and tends to, we are learning more and more, have an incredible passion for socially responsible investing. And so we have done a lot there to kind of meet that desire of the customer.
Got it. So just so everyone's on the same page, and this is sort of how I was introduced to Betterment back in, call it maybe 2013, 2014. Betterment is this now largest independent digital investment advisor offering wealth management with super easy to use, transparent and automated personalized investing and all that fun stuff. In that, you mentioned this 401k program now for small to medium-sized businesses. That sounds really exciting.
It is. And I think, it actually is really nice. Our mission is making people's lives better. And I think it's an incredibly lofty mission. It's a really aspirational mission. And the 401k really helps us to deliver on that mission, right? Because people's lives, you live a long time, right? And so retirement and how you think about sort of those later years, you're really better off starting early. And so the 401k business was really a very natural evolution for us. And we actually launched the business a handful of years ago, but have gotten much more serious recently about it as the regulatory environment has really become friendly to businesses helping their employees more and more with their long-term financial health.
Got it. And I think that's really important too, because I don't know if you've seen this study, but Dave Ramsey always totes it, how he did this massive 10,000 millionaire study. I want to say back in maybe 2018 or 2019. And I want to say north of 70% of millionaires in the United States attribute their wealth from their 401k investing through work, right? So that, the 401k is now this sort of poster child as to how someone can build wealth over the long term, especially going into retirement. So I love that goal. Sarah, you're really smart, right? You've graduated from Harvard Business School. You then ran a couple global media companies, right, for a couple decades. It's nothing serious, right? So walk me through this recent career switch from media to financial services. Is Betterment perhaps now allocating more of a focus on finance media, or am I thinking about that wrong?
So I was attracted to Betterment really for its mission. Again, making people's lives better. What could be more exciting a proposition than that? And, when I think about my career overall, I'm a real believer in great brands. And so when I thought about leaving the media space, I had thought about media for a good 25 years. I was looking for the next challenge, and I was looking for a business that I could really believe in and where I could help build long-term brand value, which really has been a hallmark of my career. And so, I really felt that Betterment had all of the underpinnings of a great brand, but that there was an opportunity to unlock that. And how do you think about a great brand? A great brand, I believe, super serves a target audience. And so when I think about Nickelodeon, we used to say what's good for kids is good for business. And we were maniacally focused, relentlessly focused on, on kids and what they want and how to reflect them and have them see themselves, on the screen. And when I think about Betterment, it's a great example. This is a product that works incredibly hard to put the customer at the center of everything we do and to constantly be bettering ourselves, which in fact is what Betterment means, on the customer's behalf. And so, what I loved about Betterment, although it's a different industry and it's a different demographic, I loved that sort of customer focus and that desire to constantly innovate. But I did feel that while it was a great product, there was just such a bigger opportunity out there to serve a larger audience. And that was the challenge that I really came to unlock.
Got it. That's really interesting. I like that perspective, right? Just thinking about, you mentioned these underpinnings of a strong brand. And I totally agree, right? Because when someone thinks about brand and brand identity, as well as, wanting to work with a company, they have to trust the company. They have to, especially as it relates to our finances, right? And it seems like you're, successful at building that brand trust. And as to what you said, I would argue that Betterment's now certainly under your leadership moving in the right direction to continue doing that.
Thank you. Yeah, no, I think, look, trust is one of the pillars of our brand. And I think, again, why did I come here? A trusted brand is a really hard thing to build. And Betterment, now more than a decade strong, has really built that trust with customers. And, this is a long game, right? Saving for your future is a long game. And so the track record here was something that was really attractive to me.
Well, let's keep rolling with that subject then, trust, right? You don't have a finance background. I would argue that the sort of C-suiters at other big financial firms do have financial backgrounds, like specifically working in banking or private equity or something of that nature, right? So you don't have this finance background. Why should people trust you, right? Why should they think that, you're equipped with the right knowledge and experience to run a financial services company? Walk me through that.
Well, I think I would start with, while it's important to trust me, what's more important is that you trust Betterment, right? Because Betterment is where you are, putting your savings and putting your future, your faith in your future wealth creation. So if I think about the business, we've been around 12 years and we have over 400 professionals, real experts who are working hard every day to help customers, save better for their futures. So again, not just about me. I think this idea about fiduciary responsibility is a really important distinction. This is a legal standard. We are an RIA, a registered investment advisor. The legal standard that we have to uphold demands that we put our customers' interests first, right? And so many financial platforms are merely that. They're platforms where you can go and manage your own money. We are held to a higher standard, both legally and morally, right? Which is we need to put the customer first, and we take that responsibility incredibly seriously. And so, so I think that is really kind of the core insight around trust. If you want to talk about me and trust, right, what I would tell you is, think of me as almost the typical Betterment customer, in a sense, which is you don't need to be a finance wizard to start investing because we have simplified the complicated on your behalf.
Ooh, I like that a lot.
And,
I like
I
that.
do think, like, you think about single stock picking, and when the markets are hot, everybody thinks, they're a genius. But the reality is there's a real asymmetry of information out there. And so I think what you're relying on with Betterment is you're relying on great technology. You're relying on a team of experts behind the technology, right? It's not just a platform. There are human beings behind that, right? Developing portfolios, and they have a real depth of knowledge. And so I would say, it's really about the time-tested principles that Betterment stands for that you're trusting, right? Invest for the long term. Coming back to your point about 401ks, like one of the reasons that 401ks translate to millionaires is because people are starting early, right? The 401k is very often an investor's very first investment account. And so it's where they start. It is also tax advantaged. So it's a good place to start, but it is where they start. So I think this idea of invest for the long term, diversify, right? I'm not picking individual stocks. I am living the values of Betterment, which is diversify, right? And then the power of compounding. Right? The power of compounding says the sooner you start, the more it will compound. And none of that requires, I don't think, an entire career in investing to understand what are really like pretty basic principles. I would also just lastly say that, as a CEO, really the greatest responsibility is hiring the right team and managing the team. And that's what, that's really my core job, is to inspire a culture of employees who want to do great things for our customers.
I love all of that. That was incredible, Sarah. You did, however, touch on something that I certainly resonate a lot with. And you mentioned, a lot of sort of information disparity, and like, everyone doesn't know everything, and everyone can't, I guess, understand all the headlines on CNBC or maybe the Wall Street Journal. There's a lot of just stuff going around, right? And there's a lot of, maybe you want to read something on NerdWallet or The Balance, and it's just maybe hard to understand. I'm a big believer that information is free, and everyone should be equipped with the tools and resources to make those educated decisions with their money, right? For those who follow along on my email newsletter, every morning I send out this post called The Investing Week Ahead, which equips everyone with information to attack the next 5 trading days, right? So my question now is, you mentioned this information and how important it can be. What is Betterment doing to equip their customers with information, resources, transparency, anything and everything to make them feel more in control of their money?
So I agree with that whole kind of setup there. As a long-term partner in a financial wellness journey, I think proper financial education is a huge part of that. So I think you really hit it on the head. And, if we think about this last year and the pandemic, I mean, if only it had only been a year, but this last and seemingly endless pandemic, right? This was a catalyst for adoption of digital products. And that's true throughout life, right? Not just in investing, right? Whether it was e-commerce, all digital things rose, right? And I think, a lot of businesses are talking about democratizing finance. And in some ways, I think they're using the word improperly, right? Because yes, digital does bring access to finance, but that access can be dangerous, I would say, and in particular around sort of gamification, right? You think about the meme stocks and the idea that there's sort of this, follow the crowd mentality, again with asymmetrical information, and it's a little scary for people, right? There's going to be winners and there's going to be losers, but on balance, that's a really hard game to win, right? That's why there are professionals who do it, and that's why, by the way, we don't do that, right? We think about let's play the market. Let's not pick the winners and the losers because we don't necessarily individually know. So I think, for us, and sometimes we don't get enough credit for this, I think, from our customers, which is the advice we're providing, because a lot of the advice is pretty subtle, right? So in things, the automation is actually giving you advice, right? So depending on what you're saving for in your goal, you put in a time horizon. Based on that time horizon, our technology will tell you what mix of stocks and bonds you want, to manage both risk and your time horizon. And if you put in a different time horizon, it'll be less risky or more risky, right? That is advice, but I don't think, because it's not someone picking up the phone and calling you, customers don't always realize that. And so I think that's something we're really working increasingly on. The automation is really, really powerful, right? When to sell to harvest a tax loss is also advice. It's a way to increase your return. options. But again, these are sort of subtle realities of where the technology is providing value and providing information. And candidly, I don't think we always do necessarily the best job of communicating the value that we're creating on the customer's behalf. And I think it's something we're working on, because we really want customers to understand, like, we've got your back and the technology is doing a lot to continue to support you.
I love that. That is amazing. And I think what's interesting too, and one of my favorite things about Betterment is your, goal forecaster, right? You have this massive dashboard of, you can create a goal if that's a down payment on a house or a kitchen renovation or saving for a new car or college or whatever. And you guys are over here giving them the playbook on how to achieve that goal. And I think that's really powerful.
Yeah. No, the tools are great. And it's funny you mentioned that, because we've been trying to make that like a cleaner and clearer user experience, that goal forecaster, because it is incredibly powerful. And, not as many customers take advantage of it as we would like, because we think it really can help them kind of scenario plan and think through the options in really exciting ways.
Absolutely. And I think there's a massive, it's funny too. I was, kind of leaning back here towards when I first started posting content on TikTok. What I would try and do is not just share an idea or, share some sort of, how important compound interest is as like the definition, but also try and illustrate it in such a way where you could begin to put real numbers and quantifiable data around it. So for example, oh, I know I should be investing. Compound interest is cool. I get that. But then it's like, oh, Austin just explained to me how $72 a month can turn into whatever this massive amount is in 15 years. Like, whoa, now I get it, right? And the goal forecaster, I think, aids into that, showing you what that looks like over a period of time if, someone follows the sort of advice that you guys are giving them.
Yeah. So funny story. My 17-year-old son actually saw your TikTok, and he had his first job, and he came and he said, Mom, if I save this money now, I could be a millionaire. And so he took his summer earnings and he put it in a Roth IRA, and that's thanks to you. So how about that?
That is amazing. That is so cool. That is so cool. Well, so that's, let's think about other folks now, moving into the sort of, halftime report here. We have we're introducing something called Mailbox Money, where, I've got over 5,000 folks that tune into my Substack. It's this email newsletter I'm doing, and then obviously tons on TikTok. But, I sent out an email a couple hours ago asking people if they had any specific questions for you, the CEO of Betterment, right? How cool is it to ask a CEO a very intimate question? So I've got 3 here. We'll start with Stephanie from Utah. Stephanie says, "Hi, Sarah. I use Betterment and actually heard about you becoming the CEO about a year or so ago. I'm a fan and wanted to congratulate you on being a woman CEO. I know Betterment isn't traded on the stock market, but only 6% of the S&P 500 CEOs are women. Was wondering what the climb to the top has been like for you and what you'd say to younger women that want to rise in the business world."
Well, thank you, Stephanie. I appreciate the praise, and there are too few women at the top, which is really disappointing reality. And I'm confident that will improve in the coming decade with the strong millennial and Gen Z generations coming up. I think passion has been something for me that has always driven my career, and a lot of women. Look, I've been fortunate enough to be able to stay in the workforce and had a rewarding career that has been financially rewarding enough to be able to support both raising a family and pursuing a career. But I think for me, it comes back to passion, right? Which is I have sought careers and jobs where I really love what I do. And I think you can't underestimate how much of a better job you do when you love what you do, right? So I love, when I was growing up, I really loved film and television, and the film business. No self-respecting economics major would go into the film business because it's just a really bad business. I mean, it's great for the stars, but it's bad economically, ultimately, for those making that content. And so I went into the TV business because I just loved it, and that propelled me to, almost 25 years in the media business. And similarly, while I haven't pursued a career previously in finance, I did actually early in my career have a stint at Goldman Sachs, which so there was a little hint of finance in there. But I did always have very financially oriented jobs in the media space. And I'm really passionate about it, right? I do love investing and thinking about ways to do that better. And it's always kind of been who I was personally. And so I think bringing that passion is a huge contributor to being successful ultimately.
There you have it, Stephanie. Love it, right? Boom. Moving on to the next one. We've got John from California. This one's actually kind of interesting, right? John says he got an email about Wealthfront's announcement of being acquired earlier this week by UBS. What does that mean for Betterment, if anything?
So that's a good question. I think it's a great validation of the space. And I think it's really a great outcome for Andy and his team over at Wealthfront. So, kudos to them. If I think about our business, our core retail business is really the business they're in. We have a more diversified business. So I think the fact that there's been so much interest from large financial institutions in these capabilities, these digital investment capabilities, is a real validation. And we've seen Wealthfront is really just one in a long history of these digital platforms being acquired by larger financial institutions, because it's really hard to build. So I think, part of the learning is like, this stuff is not easy. And so, 12 years in, we have one of the best platforms in the business. And so I think, to see Wealthfront exit leaves us standing tall, right? We were already the largest independent. Now we are by far and away the largest independent. So that's kind of exciting moment for us. And then, it also made me think about the other businesses that we're sort of incubating, which is our advisor business and our 401k business, which are really huge growth businesses for us. So it encouraged me about what we're building here at Betterment. But I think independence has really been a huge part of our brand value. And so I'm really thrilled with where we sit right now, kind of in the context of what's going on out there.
I love it. Another great question answered. Moving on to our final question here. We have Muhammad from Georgia. Muhammad says, I'm 31 and just became debt-free for the first time since I was 18. What would you say to someone who's never looking to get into debt again?
Well, first of all, I would say congratulations. That's a huge milestone.
Absolutely. Wow.
By the way, you're not alone, right? When you think about it, student loan debt there's nearly $2 trillion of student loan debt out there. And it's probably the biggest challenge that the millennial generation faces and Gen Z behind them, right? And we've learned this actually really interesting in our 401k business, again, not to keep coming back there, but one of the biggest reasons that folks don't invest in their 401k when they have an opportunity to do so is because they have student loan debt that they're paying off. And so they just don't have the disposable income for that. So I think, you're not alone, Mohammed. I would say to you that, responsible saving and starting early, like no amount is too small. So what I would say to you is like, if you can set aside $5 a week, if you can set aside $2 a week, like no amount is too small. And the more your financial security increases, the more that builds on itself. And so I would say, don't be afraid. And if you don't know how to invest or you feel like it's scary, there are a lot of really fantastic, really supportive tools. Of course, I would put Betterment first, but I think, we aren't the only ones. Let's be honest, right? There are a lot of places where it's pretty simple and you can learn and you can kind of get your feet wet. So, I also think, something that you want to think about, we don't do debt management yet here at Betterment, but, interest rates can be a killer. And so I think reading the fine print is another place that people really need to understand, like, what does it mean to carry credit card debt, right? That costs you a lot of money, right? So pay off your credit cards, right? So I think, being smart about what your debt costs you is important, and reading the fine print and starting early, but I think all of that is just, sound long-term advice.
You heard it here first, Muhammad. I love it. Well, let's move on now. To sort of the second half of our podcast, right? And this is a couple more questions. I think we just have two more. So I spent a lot of time browsing Betterment's website in preparation for this interview, right? Just kind of nervous, and I want to make sure that I was well equipped with all the fun stuff to be able to talk toward, right? And something I came across though on your website were your portfolio options. According to your website, when people invest their money with Betterment, they set they get strategy built on Nobel Prize research, investments diversified across the globe, personal digital advice on how to invest, and expense ratios well below the industry average. That's a quote. What is Betterment? What makes Betterment different from other robo-advisors, right? Isn't everyone else diversified and researched? I don't know about Nobel Prize research, but isn't everyone else doing that as a robo-advisor?
So first of all, when you read that, I think to myself, we should just say that more simply, shouldn't we? But it's amazing how hearing it from somebody else, makes you think differently. So I would say to you, look, there are some things that are table stakes, and then there are some things where, we differentiate, and let's talk about the difference, right? So a decade ago, when John Stein, my predecessor, launched the business, all of those things really were very unique in the marketplace. Right. And in particular, bringing sort of automation and access at a low cost, because it really was the technology that enabled those low costs and that access. Right. It used to be that you needed some amount of wealth to access a human advisor. And the original insight behind the Robo-Advisor was, how do I replace that high touch human interaction that requires high net worth with sort of a lower cost, more accessible solution? So I think that's kind of where it all began a decade ago. Fast forward, I think now what we're seeing is that that's just not enough, and that's table stakes, right? And so this question of personalization, I think, is a really important one. And I think it's going to be the defining, one of the defining characteristics of how we move forward and how we think about the different platforms. Certainly at its farthest extreme, self-directed investing is the most personalized in some sense, right? Which is do whatever you want, go for it. But that's complex, that's time consuming, and that's not for everyone. So for the folks who feel like that's not for me because I don't have enough hours in the day, or I don't have enough information, or any range of reasons, I think where we're trying to head is we are trying to offer incrementally more personalized solutions without sort of choice paralysis, right? And so, for example, we launched last year socially responsible investing portfolios. That has been, there are three of them, one for climate, one for broad, one for social impact. Huge adoption, our fastest growing portfolios, incredibly exciting because they really align. It's a great sort of example of personalization, which is this is something the customer really has told us they want. And so how do we, number one, bring them those portfolios, but number two, continue to innovate on those portfolios, right? Yes, a lot of folks have Nobel Prize winning research, but the reality is we don't sell any of our own products. We sell the best third-party products. And when we're selling a product or offering a product that isn't the best, and we think there's a better one out there, we change it out and make it better on the customer's behalf all the time. So we don't have a separate kind of side agenda or side, financial stream as.
Isn't that weird? It's like I've seen some other folks that are like, invest into this or invest into that, and you look into it and they're the one that owns the fund, or they're the one that owns the ETF. Right. And you're just like, so let me get this straight, right? I'm trying to get my stuff figured out, and you're putting me in products that only make you more money. Like, are we sure that's all in everyone's best interest here?
Exactly. So
I love that you guys aren't doing that.
So I think, transparency is an important part of what we bring. But I think, it starts with experience and our track record. And again, we have it. That probably distinguishes us more from the challengers than from some of the incumbent, banks. And our sizable AUM, I think, is sort of proof positive of that. I think innovation in our DNA is a distinguishing characteristic, right? Which is, every week we are releasing a new version. We had someone join us actually from one of the big banks, an employee, and she told me, the amazing thing is we used to push a new version of our app like once a quarter. And we're pushing a new version of this is at the big bank. We're pushing a new version once a week, right? And so I think it was just a great sort of example of an incoming employee kind of seeing the value of that really constant iteration. And that's, I think, where we distinguish ourselves relative to incumbents as opposed to relative to the challengers. And then, as a business where we're differentiated, which I think is an important, more part of our business story than it is part of our consumer story, is our multi-pronged distribution. So we have built a really great platform, and we are then selling that platform, leveraging that platform to three distinct audiences: retail customers, financial advisors, and small and medium-sized businesses. And that is really unique in our marketplace. There are a lot of competitors going after one of those three audiences. And I think where we're seeing really interesting economies is we can build a great thing like socially responsible investing portfolios, for example, and then offer it to all three audiences, because that is a valuable product for all three audiences. And that's a way we can really accelerate our innovation that is really exciting.
I didn't even think about that, right? Offering it to the 401k type audience. I had a 401k before I quit myself a 401k. But what I'm saying is I was contributing to it before I quit my job to be a TikToker. And I didn't really have too much flexibility, right? One of these big banks is the one who our company did it through. And it was like, hey, how aggressive do you want to be? That was all the sort of flexibility I had on it. And the fact that you guys are sort of building these 401k plans that are more, I guess, like personalized, right? You mentioned the socially responsible investing, all that fun stuff, ESG. Walk me through that. I feel like a lot of people aren't as familiar with that as you. And I feel like it's such a new topic. People kind of maybe like brush over it. They think maybe it's not worth learning about because it's not, historically proven to be good returns. Walk me through ESG and social, like who is a socially responsible investor? Who is that?
Sure. So, interchangeably, we use ESG and SRI, socially responsible, environment, social, and governance. So it is kind of jargony, but I think, fundamentally, it's an opportunity to express your values in your investments, right? So whether you're passionate about the climate, whether you're passionate about social equality, you can invest disproportionately in companies that align with your values. And I think that's really the opportunity, again, in personalization. And I think, a common misconception is that there are trade-offs. Like if you want to invest, to do good for the environment, that the trade-off is that your returns will be lower, right? And I think that's an important misconception. When I look at the returns we see, they're really, right in line with general diversified investing. And so I think, that's kind of become an exciting unlock for this generation, right? I mean, think about this generation, again, our target customer, who wants to affiliate with businesses that like live their values, right? They want CEOs to be even more vocal about values, right? This is really like a wave of change that's hitting all industry. And so, we found that like, this is also, it's a place, talk about betterment and the idea of like constantly iterating and constantly making it better, right? ESG, it is early in its journey. And so we're finding, better and better products to enhance those portfolios. And as we do, whether it's lower cost, whether it's lower emission, right? Whatever the standard, we do a ton of research and we're always making those products better because more and more products are coming out that are better and better. In this sector. So we see it as just like a really, great place to play. We've also seen it's an expansive idea in terms of attracting new audiences. For example, women, coming back to Stephanie, the investor, right? Women are investing more heavily in our socially responsible investing portfolios than they are in our core portfolio, right? Because they're drawn emotionally, perhaps, to doing good, right? And I think it's exciting and there's so much more to come there.
I think it's very exciting as well. And personally, I spend a lot of time broadcasting with Sylvia Jablonski. She's the chief investment officer of Defiance ETFs. And she's focused on something that you mentioned too. It's like, ESG and social responsible investing, but they're very like thematic, right? I feel like we're my age of folks, even these millennials and people of that sort of demographic, want to invest in things we understand. We understand 5G. We understand, the iPhone. But on the other side, it's like, well, what's a ETF? Like, I don't know about all that stuff, but I understand, call it semiconductors and computers and things of that nature, right? So it's like leaning into this, SRI and ESG sort of topic as well. It's like people understand things that mean a lot to them, and which then helps them make that first step either to start investing or to even begin, broadening what that looks like with their 401k or things of that nature. But I think understanding what you're investing into is major. And you guys certainly look like you're doing that.
Yeah, no, it's funny because you really are a bullseye for our customer. We actually, following socially responsible investing portfolios, we launched an innovative technology portfolio in December. Okay. So we just launched it, and that's actually been our fastest growing portfolio. And the thing that's so interesting about that is that was really customer feedback that led us there. And I think exactly what you're saying, which is when we asked about thematic portfolios, where do you feel like you'd like to play and either we don't offer or you can't find kind of the right thing out there in the investment landscape, and sort of the next, sort of future forward businesses was where our customers wanted to be. And so we launched this innovative tech portfolio, and I think it's going to be another really exciting one for us and for our customers.
That's awesome. Congratulations. Let's sign it off, right? It's been a little bit over 30 minutes now in my intro, so it's about 30 or so minute long podcast. So for y'all that have kind of stuck around here, I appreciate you. This is a question that we are going to begin asking every single guest, right? You're our inaugural guest, or you're the first one to be asked this question. So the question is, right, it's thinking about what we're observing. We mentioned themes and things of that nature. In 12 months from now, what do you think people are going to be referring to when they say to themselves, how did I miss this trend? Or it was so obvious, right? So what was that trend that's happening right now that you think is just so obvious that people aren't paying attention to?
So I think the one that people aren't paying attention to, coming back to our conversation about socially responsible investing, is around shareholder activism. And this idea that it used to be that ESG investing was about, divesting of companies to, support fossil fuels, right? And now really there's an opportunity to drive positive change from within companies through your investing preferences and selections. And so I think you're going to see more and more shareholder activism and individual investors almost aggregating their power, if you will, sort of like the meme stocks, but aggregating their power to do good in this instance.
Right.
And I think it's a really interesting, we saw it with engine number one, right? We saw it as they moved to make change at ExxonMobil later last year. And I think you're going to see more and more of that as customers really do want to push for change within companies. And that's exciting.
That's certainly exciting. That is awesome. It reminds me, we talk about meme stocks, right? AMC, I think I saw where if you can prove that you owned AMC stock in your Robinhood account or whatever sort of brokerage you were using, they would give you a free bag of popcorn at your next movie, right? That's so interesting. But I wonder if, to talk about the shareholder activism, if companies are sort of going to even begin to treat their shareholders differently, right? You prove that you're an investor into Apple or perhaps Amazon or Microsoft, and maybe that translates into a discount, or maybe it translates into expedited shipping, or I don't know, right? But I agree that that's certainly something that's happening right now, and I'd be curious to see how it evolves in the coming 12 to 18 months. So, Sarah, thank you so much for joining me. This was, again, the inaugural episode of Rate of Return, the podcast, this 30-minute or so podcast. And thank you to the listener for allowing Sarah and I to share our unique perspectives. My name's Austin Hankwitz, and I'll see you next time.
Thanks, Austin.